Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders for Elliott Wave Trading. Our website is www.24elliottwaves.com. For general technical analysis, www.stochastic-macd.com. The title of the video is how I validate my Elliott wave count like a pro, part 2. Yesterday, I recorded a video that we titled how I validate my Elliott wave count like a pro. Alright, so this is part 2. In this video, I want to discuss what is taking place here because yesterday we have counted first wave, which is the pink line here, from here to here. That's the first wave, second wave, third wave, which is the orange line here, the fourth wave, the turquoise line, fourth wave, followed by the fifth wave. The pink line here is the fifth wave. So from this point here, all right, up to this point here, this is what we call the motive wave. So between the two vertical red lines, we have the motive wave. This is what we did yesterday on the 50-minute chart, trading the euro-dollar currency pair. I also continued with my wave count yesterday, and we see a double retracement here, 1, 2, 3, 4. All right, this is a double retracement. And in this section here, between the red line and the green, the red vertical line and the green vertical line, we have the double retracement, followed by 1, 2, 3, 4, 5. All right. So my line, I've drawn my lines before this has happened. The price was here when I was recording the first video, and I was telling you that we are expecting the euro to go back up and to pull back, and then to find a support. This is what exactly has happened, okay? So you see the price went up and pulled back. Now it went above the notch, validation of a double bottom pattern, all right? Okay, here, you see? This is what I like to call the notch, okay? This is the knot of the double bottom pattern. So you went above, break above, D below it, and then push it out. And the price ran fast, all right? So far, so good. As I explained to traders yesterday, the wave count, the Elliott wave count, is a dynamic process. So when we are counting wave, all right, we say to ourselves, okay, this is what we have seen. This is what is taking place now. Wait and see what the price, the number one indicators, will reveal to us. We cannot just become too arrogant or too excited about our wave count. We just put it aside and say this is what we have seen. So if the price confirms, okay, our wave count, we will take advantage of it. I also used yesterday, combined the 50-minute chart on the 4-hour chart, okay? So I was telling you that the motive wave that we have seen here on the 50-minute chart, okay, may be labeled as a single wave on the 4-hour chart. And also the corrective wave that has started from here all the way down here will be our second wave on the 4-hour chart, provided that, okay, the price did not cancel this move here, the motive wave. So yesterday up to today, the price did not cancel, okay, the first wave. So far, everything is working beautifully. So, but if the price come back down to the starting point, everything, we will start recounting the wave. When the second wave cancels the first wave, we must start counting the wave. So here it did not cancel it. Everything stands beautifully now, but the price is at a resistance level. What is the next step? Okay, all right. So you see, we count the wave, we wait for the price to confirm it, and then we take it gradually. We want to align our wave count with the wave principle. Second wave should not cancel the first wave. Fourth wave should not overlap the first wave. The motive wave should be in a rising channel, all right? The correction that is following after the second wave should not cancel the motive wave completely, okay, in normal condition. And we take it from there, okay? So far, we are here. So everything aligned carefully, and it was a beautiful trade. The price ran up to the resistance level. What are we trading? We are using the Elliott wave patterns, okay, to determine the bullish and bearish, okay, signals, all right? All right? But we cannot violate market patterns. We cannot ignore resistance, support, levels. So as the price was going up, it's normal for traders to take profit here. That's what's happening here. But if the bullish momentum is strong, my expectation, again, talking about wave count, which is a dynamic process on a live chart like this, we want to be following the price. So what is my expectation now? So because I'm expecting this session here, all right, to be a single wave on the 4-hour chart, and this session there, which is the flat correction, to be a second wave on the 4-hour chart. So in my view, according to my wave count, this is the beginning of the third Elliott wave. What is the condition for the third Elliott wave? The third Elliott wave will not take place, all right, if the fundamentals are not solid, if the market sentiment, okay, does not support the third Elliott wave. So when the third Elliott wave is underway, like you see start here like this, all right, so we will be saying, all right, let's see what's going to happen. But remember, everything can change. This is the mistake that a lot of Elliott wave traders, even in some very, very experienced traders, who are working for financial institutions, sometimes they lose big money. What's happened? Because people have a big head. Now, this is not to insult people. It means that sometimes traders can be very, very confident, okay, with their wave count. They can assume that, okay, definitely this is what's going to happen, and people will load it, and the price will do something else. I do not recommend that attitude to traders. What I recommend is a conservative approach, okay, a humble approach, where one is going step by step. So, though we will say that this is the beginning of the third Elliott wave, as the price going down, the price reaches this resistance level, it's a normal place to take some profit. And then just wait. So, for the third Elliott wave to continue, you see now, it may continue, it may not. It will continue if the market sentiment support this bullish progression, or the fundamentals are solid. If, for instance, all right, ladies and gentlemen, you go to Forex Factory, another economy news come out that is completely bearish for the euro-dollar situation in Greece, all right, ECB saying something else, or the central bank United States say something else, we may see a different picture. So trader will turn around and say to me, oh, this is just a useless wave count. But it is not a useless wave count. The wave count, okay, is not cannot okay, supersede, so to speak, okay, the market sentiment or the market environment. This is what we want you traders to understand, all right? So we are counting the wave, but we are waiting for confirmation each time. This is what I meant by dynamic wave count. One step at a time, without assuming that the price will definitely, okay, complete the third Elliott wave. It is at a resistance level now. Okay, you see now? So, at this point in time, how do we handle this messy situation? Good question. So now, because I see the internal waves are the manual waves, or for the first and the second wave on the 50-minute chart, I'm going to go now to the 4-hour chart. All right? So far, my wave count on the 50-minute chart is looking good, but as I told you yesterday, coming to the 4-hour chart, I was telling you that what we are looking at on the 15-minute chart, because the price still in this range on the 4-hour chart, all right, you remember that? All right? Our wave count on the 50-minute chart is just a beginning of a bigger wave count. What do I mean by that? So what do I mean by that? Is that this first wave, followed by this second wave, these are just a minor wave of a bigger wave. So there is a high chance, looking at what we have seen on the 4-hour chart, that this move up and down will continue, followed by a third wave, fourth wave, and a fifth wave. And all together will form the first wave on the 4-hour chart. Are you with me? So on the 4-hour chart, the first wave is not yet completed until we see, okay, the price breaking this resistance on our left-hand side. It did not, you see, stop at the resistance yet. So before we can confirm the move that has started here, that we are seeing the move that has started here, in fact here, I explained to you yesterday, I don't want the video to be too long, that has started here, okay, to be labeled as a first wave on the 4-hour chart, we must see 5 moves. 1, 2, we are now in the third one, should continue to break this resistance here, followed by a fourth wave and a fifth wave. And all together from here to the end of the expected fifth wave on the 4-hour chart, all right, we will have the first wave on the 4-hour chart. So our first wave on the 4-hour chart is not yet completed. Will it take place? We will see. Why? Because if the market sentiment has changed, if the price failed to find a support above this resistance level, we are not having the third area wave, and we will start counting the wave. So if the market sentiment has changed, the market environment is not viable, all right, our wave count will become useless. We'll put it aside and wait again for another, okay, a signal or another, how do I put this to you, a starting bell, so to speak, all right? It makes sense? So on the 4-hour chart, what we are looking at now, we have this move, you see here, from here to here. So I'm going to draw a line again. So I want you to concentrate. So from here to here, that's why you see the two red lines. That's what I like to call the first minor wave on the 4-hour chart. It's not the first wave itself, it's the first minor wave on the 4-hour chart. I want to bring a funny color so you can see, because I have too many lines. I'll use the turquoise line, see here. From here all the way here, that's the first minor wave on the 4-hour chart, which has been divided into 5 minor wave again on the 15-minute chart. Don't get confused. Don't get confused. All right, this is about the fractal pattern, talking about the wave count. All right, very important. So now this move that we have seen on the 15-minute chart that we are calling the flat correction is the second minor wave on the 4-hour chart. So far, you can see that my second minor wave on the 4-hour chart, which is the flat correction on the 50-minute chart, did not cancel our first minor wave on the 4-hour chart, which is the multi-wave on the 15-minute chart. So our expectation is what? Our expectation is that the price will go back up, all right, to form the third minor wave on the 4-hour chart. I'm talking about minor wave, but because we are expecting the real first wave, which will be formed of 5 minor wave on the 4-hour chart to break this resistance here on the left-hand side. So far, my wave count is still in place, and everything is adding perfectly. I do not violate the market pattern, and I'm just flowing with the price, okay? But for the third area wave to continue, this resistance here should be taken out, and the price should break this resistance also here. So we will have first minor wave, second minor wave, followed by the third minor wave. Okay? I'm going to go back again to the 15-minute chart, talking about dynamic wave count. Okay? How I validate my wave count, part 2. Going from the 50-minute chart to the 4-hour chart, trying to validate my wave count without violating the market pattern, one step at a time. So what's happening now, okay? So we are expecting the third wave, if the market allow it, if the market sentiment support it, okay, to continue to go up. This time, what do we need to use? We will use the Fibonacci retracement for the first wave. So we want to know how far the second wave went down. I have done my whole work, okay? The second wave retraces down to the 78% Fibonacci retracement level. Some traders use 78.6%. I use just 78, and it works all the time. You see how you stop on it? No 78.6, this line here, the horizontal line here. Just stop on it. I use 78. I don't use 78.6%, but the real Fibonacci number is 78.6%, but I always set it at 78. All right? So it works most of the time, 78, on the dot. All right? You see, display double bottom on it. So the retracement of the second wave so far, you see the wave count, we are going one step at a time. If it's cancelled, we forget about it, we'll start again. All right? We are not assuming anything, we're just flowing with it. But if the price doing exactly or fulfilling our expectation, well, we just take advantage of it. Like yesterday, we were expecting okay, the flat correction to be completed here and the price to find a support. It was a beautiful here and it just ran fast. This is what you want to do step by step. Economy news, fundamental, market sentiment, market environment, market patterns, okay, and the wave principle. The reason why I speak like this to traders, which sometimes some traders find a bit difficult to swallow, so to speak, all right, is that I've seen it all the time when even hedge funds, big institutions, will lose big money. If you go, for instance, to some of the trading firm, there is always somebody they call the supervisor, somebody who is ahead of other traders. Sometimes there is a conflict. So you have an ordinary trader trading, and they may point out something very serious and say, look, it looks to me that this, we shouldn't do this. And the person who is the leader may say, no, I override that decision. We're doing what I'm expecting. Who are you? I'm the boss. Listen to me. And the firm will lose a big chunk of money. Crazy. Crazy. All right? Crazy. All right? Why people lose? People lose when they are fighting the market. People lose when they violate the market pattern. People lose because they come to the market at the wrong time. All right? Or they time the market wrongly, or they push it too far, or they expose themselves to higher risk. Now, at the end of the day, all right, a lot of traders, I don't know what is your objective. Are you in the market to continue to lose? All right? Or are you in the market to make money? Now, there are two solutions. If it's working, you stay in the market. If it's not working, look for something else and do it in life. It's very simple, okay? You don't have to trade, all right? There are other things people can do in this life. All right. So now we are waiting for the third Elliott wave. Okay. So with that information, I know that my second wave is now at 78.6%. The minimum expectation for the Fibonacci extension is the pink line here. This is the 1 to 7% Fibonacci extension level. So we will expect our third Elliott wave to reach at least this level of 1 to 7% Fibonacci extension level, which is the pink line here. But there are more to it. For traders that are following us, will know that we will also use the minimum that we are expecting is the length or the magnitude. Two things. The length or the magnitude of the first wave. I will not repeat myself. Now, I will send traders to our YouTube channel to follow Elliott wave. So something like this, I'll put it like this here. And so this will bring us to the level of 150 Fibonacci extension zone. So the price level for the euro, it will be at 115.04. If we use the length of the first wave, we can also use the magnitude of the first wave. So I just put it on top here. You see where the price found the support here. Because if I move it here, you can't see the line. That's why I push it to the side so you can see it. So conservative measurement is in the zone of 150 Fibonacci extension zone. I use 150. I like it. It worked beautifully. No, this is not 150. By the way, my apologies to traders. Let's recap, ladies and gentlemen. The red line is not 150. It's 138% Fibonacci extension zone. What are you talking about, George? 138% Fibonacci extension zone. All right? 138% Fibonacci extension zone. Some trader will talk about 138.2%. That's okay. I like 138%. Round number like that, okay? So either we are watching a level of 1 to 7% extension, Fibonacci extension, and a 150 Fibonacci extension. Doesn't mean that the price will stop at 1 to 7 or 150. The price may continue to go up. So suppose we were expecting it to stop at 1 to 7, okay? Remember our guidelines. The first wave must break resistance on the left-hand side, especially the third wave, even if it is a minor third wave, should break resistance on the left-hand side. So if it reach this level, it breaks this resistance here on a 50-minute chart. But if we go to the 4-hour chart, let's see the resistance. 1 second, please. Okay, 1 second, please. I'll get there soon, very soon. Move this out of the way. All right. 1 second, please. Just playing with this software. I'll get it soon. Going to zoom into my chart so you can see everything clearly on the 4-hour chart. Okay. Zoom into it. Zoom into it. It's becoming bigger now. Okay. All right. Let's pull this one down. Okay. You see now. So you see the red line now. So if we stop at 1 to 7, we are just displaying a triple top. Yes or no? All right. So our third minor wave on the 4-hour chart, if you stop at 1 to 7, it will violate the wave principle because this resistance, following our guideline, will not be taken out. So if it goes to 138%, which is the red line here, it's still in the resistance, or you see the shadow of this candle here. Are you with me? Okay. All right. If we stop at the red line, it's not very good also. All right. If we push it more, we reach the 150%, which is the green line here, this thin green line here. I won't be very happy about it either because of this tail again. So the best scenario is to bring it above the 161% Fibonacci extension zone. So which will, all right, even go to 200 level, okay? So we want it to go above the level of 154.0, 154.40, 15. It's lunchtime in London. Yes, it is. It's at 2 p.m. Getting tired a bit now. Okay, now my policy to traders 115.40, 115.40. So we will prefer the third manual wave on the 4-hour chart to go above the level of 115.40. Above it. In my view, yes, where I put it now, I prefer it to go there, okay? The price level will be in the zone of 115.80. Somewhere in that region will be beautiful. At least we want this shadow to be taken out. You see this one here on the 4-hour chart. So we want the third manual wave on the 4-hour chart, which we are expecting now, all right, to push the price into the zone of 115.80. This region here. That will be beautiful. So what I'm going to do, I'm going to draw a line there, and I will leave the line on my chart, okay? So when we come back to it, because I will be recording the third part as we are validating my wave count to see what is happening. Enough of talking. George, prove it to me. That's what we are doing here, trying to prove to trader how we validate our wave count. So our expectation, we prefer it to go to in a zone, or in this zone here, 115.80, 115.60, okay? That region there, okay? In that zone, not exact price level, in that zone. Why? Because we want this resistance on the left-hand side to be taken out, break above, and then to retest it. All right? So I will stop here for now, but before I go, I'll go back to the 15-minute chart. I have too many lines on my chart. The pink line is the 1 to 7% Fibonacci extension zone, because the second manual wave has retraced up to the 78% Fibonacci retracement level. The minimum target is bringing out to the 1 to 7 Fibonacci retracement level. That won't be sufficient to confirm the third manual wave, neither the 150 Fibonacci extension level, all right, which is the red line here, followed by 161%. Again, there's a shadow here. We want it to go above even at the level of 161% and 150% Fibonacci extension zone into the zone of 115.80 price level. What is the next step? So how do we trade this? Okay, we'll go to the 15-minute chart. We are at a resistance level, yes or no, ladies and gentlemen? So we want the third wave to continue, okay? So our third wave has started from here. It say 1, 2, 3 now, okay? So this is another, okay, internal wave of the third manual wave. You see these moves here? 1, 2, 3, 4, 5, okay? All right? Will be another internal wave of our bigger manual wave, okay? All right? So our strategy is very simple, ladies and gentlemen. We can use here, because we want to buy on the edge. So what is happening now? Some traders, if you look carefully here, you see the resistance here? Some traders are buying here. It's not a bad place to buy. Why? Because the resistance here, okay, can be messy to enter here. Or we may take longer to wait for the signal. All right? Remember, you want to analyze the risk and select which one is suitable to your trading style. All right? Are you with me? All right? I'm going to draw another trend line because now we want to buy, we want to select the best place to buy. So what am I doing now? I'm drawing some lines. Which line? Join it. Am I talking to myself? Okay, I'm zooming to it. I'm joining this point here and this one here on a 50-minute chart. This low and this high here. Allow me to draw my turquoise line. I'm going to color it now in turquoise, but I will remove it later, okay? I promise I will remove it, okay? So this point and this point. So this is a trend line. The price is retesting it. Also, there is a resistance zone. So the price breaks above that resistance level, acknowledge the resistance that is ahead, and now it's pulling back on the edge. This is not a bad place to look for opportunity to buy, but it's still risky. Why? Because we are buying in a resistance zone, all right? We are buying very close to another resistance, which is this one here, the red one. We are buying here, and there's another resistance here. It's a bit risky. But the good thing about this is that we are buying on the edge of a support and a trend line. We can give it a chance. We may be taken out, but that's fine. Okay? It happens sometimes. You try to enter, they take you out, you step back, you re-enter again. All right? Okay? So, the best approach, okay, will be to run fast. Sometimes you may miss opportunity, run, let other people push it above this red resistance at 1 to 7 Fibonacci extension zone, and then slowly but gradually to pull back again, not on the edge of the red line itself, but on the edge of the turquoise line. Right here, and then, are you with me, all right? And then to start going up above the red line, and then we buy here. But we can still buy now here because we're on the edge. We can enter here with 30 pips, 20 pips, give it a chance. It may work beautifully, which means we are part of those who are breaking this resistance and then pull back. Because we know that a third area wave is underway, but on condition that the market sentiment support it, the market environment is viable. Go to Forex Factory, go to Google Finance, check the economy menu. If you are applying this strategy for a stock, though I'm using Forex here, it's valid for stocks, it's valid for commodity. Whatever financial instrument you are trading, you can validate your wave count, going step by step, proceeding with what we call a dynamic wave count strategy, without violating the market pattern, without assuming anything, without going ahead of the price, without being too arrogant, trading on the edge. Again, when you see a setup, you break it down with the trading drill. This is part 2 about how I validate my wave count like a pro. I hope you have learned something for this video also, and we put into use, to make excellent day trading and swing trading decision. I will continue with this series of videos about how I validate my wave count like a pro. I will be recording part 3 to show you what has happened and how we can continue to trade the euro dollar using the wave principle. At the end of the day, everything we are doing on the 50-minute chart, we are going back, forward and backward from the 50-minute chart to the 4-hour chart. We are expecting a bigger first wave to be formed on the 4-hour chart. That bigger first wave is still underway. We have the first minor wave, the second minor wave, and now we are expecting the third minor wave or that bigger first wave on the 4-hour chart. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders talking about how I, George, validate my wave count like a pro, part 2. If you want to know more about the wave count or wave trading, go to www.24alienwave.com or subscribe to 24alienwave YouTube channels. If you like this video, give us the thumbs up. If you dislike it, make sure you give us the thumbs down and put a comment below. George has been a useless wave count or something like that. All right? Happy trading to you all, and speak to you soon.